Every chart tells a story, but only if you know how to read between the candles. Today we'll walk candle by candle through a 40-day sequence. You'll see how effort, exhaustion, and confirmation reveal what the smart money is doing, quietly, before the real move begins. Let's start at the beginning of the decline. The first few candles show a clean downtrend, red bodies, lower closes, and each bar a little smaller than the last. Look at the volume, it starts high, then fades away. That shrinking effort tells us the selling pressure is losing force. Professionals aren't pressing the market lower, they're letting the crowd do the work. Then comes candle 6, it gaps down, drives lower, but snaps back and closes near the open. The long lower wick shows buyers stepping in. Even though the body is still red, this is what we call stopping volume, heavy effort, little result, buying into weakness. This is often where the story quietly begins to change. Candle 7 forms a shooting star, a sign of hesitation. Then candle 8 creates a small hammer with even less volume. Price barely moves. The market is testing for supply, asking, is there any real selling left? Candle 9 gaps up, lifting above the 50-day moving average. The body is green but small, a doji shape. Volume increases slightly, that's important. The market tried to go down, found no sellers, and now responds upward. We're seeing the first sign of absorption, buyers quietly soaking up what remains of public selling. But the market rarely turns in a straight line. From candle 10 to 14, price drifts lower again, another short downswing. Volume builds gradually from low to high. Candle 13 touches the moving average on low volume, and candle 14 gaps down below it on heavy volume. That wide red bar looks scary, but notice the long lower wick and the failure to close far below support. This is a shakeout. The professionals use fear to trigger stop losses, collecting more shares from weak hands. It's high effort, small result, a false weakness hiding quiet strength. Now watch what happens next. Candle 15 turns green on rising volume. Candle 16 does the same, small body, more activity. Then candle 17 explodes upward on the highest volume of the sequence, closing above the moving average. This is confirmation of strength. All that absorption below the average now pays off. The professionals who bought weakness are marking up the price. We can see the transition from effort without result, to effort with result. After such a strong candle, the market needs to breathe. Candles 18 and 19 pull back slightly, both red, both on falling volume. Notice how they stay inside the wide green candle of 17. That's a test, price returning to the moving average to see if supply remains. Candle 20 dips below the average intraday but closes right on it, showing demand still present. Then candle 21 forms a doji with a long lower wick and average volume, buyers defending the level. Low volume down bars followed by rejection wicks are the hallmark of a successful test. Supply has been removed. With supply out of the way, the next phase begins. Candles 22, 23, and 24 rise steadily, each one opening and closing higher, with volume increasing again. That's demand expanding. Candle 25 opens higher but closes a little lower, forming a red doji on light volume. That's normal profit taking, not weakness. A small pause in an up move is healthy. Volume confirms it's just cooling off. Next comes a mild correction. Candles 26 through 28 move down together, all on low volume. The market is testing support again, but without real selling pressure. Notice how volume stays quiet, the hallmark of a healthy pullback. Professionals don't chase price, they wait for low volume retracements to buy more. Candle 29 turns green with average volume, the market is waking up. Candle 30 gaps up on higher volume but fails to close higher, that upper wick shows profit taking. Then candle 31 flushes down hard, almost to the moving average, on matching high volume. It looks dramatic, but again, the result tells the truth, the price doesn't collapse. Candle 32 forms a small doji within the previous range on slightly above average volume. Candle 33 gaps down, touches but doesn't close below the moving average, and finishes green with a long lower wick. That's another test bar, low result despite effort. The professionals once more confirm that supply is gone. After the shakeout, the market goes quiet. Candles 34 through 39 drift sideways above the moving average. Bodies are small, volume keeps decreasing. This is a reaccumulation range, time replacing price. Candle 38 shows a brief dip with a lower wick below the average, volume slightly higher, another test that quickly recovers. Strength is holding, smart money is still present, quietly absorbing what little supply remains. Finally, candle 40 opens and closes higher, though volume remains light. That's exactly what we want to see. When price can rise with little effort, it means supply is gone and demand controls the market. Quiet strength, the final signature of professional accumulation. So, from start to finish, this 40-day sequence tells a complete VPA story: effort to exhaustion to absorption to test to confirmation to markup. Remember, don't chase every red bar or green bar. Study the effort behind them. When effort and result don't agree, it's never random. It's information, and that's what the professionals read. Compound and conquer, trade with understanding, not assumption.